The November Market Watch report just came out, and this time, the average selling price reached a new all-time high. The market was cooling down a little bit back in June, July, and now as we enter the winter, we are actually seeing an all-time high. So, what caused the market to go in reverse gear? There are some uncertainty factors popping up in the market. Interest rates might go up sometime next year. COVID cases are rising and there's the Omicron variant. How would the market be affected by these factors? Let's take a look at those all-time high prices first. The average price of a detached house in the 416 area got above the $1.8 million mark. That's a 22.3% increase from a year ago. Detached houses in the 905 area almost hit the average $1.5 million mark, a huge 32.7% increase from last year. Townhouses in 416 area average at just above $980,000, up 19.7% from last year. In 905, the townhouse average was around $955,000, up 31% from last year. You see, even townhouses are approaching the $1 million mark. Now, condos. The 416 area average as just under $750,000, up 16.5% from last year. And the 905 area average as just under $650,000, up 21.1% from last year. Here is the thing. Average 416 condo prices were climbing to a new high the months before the pandemic hit in March 2020. Do you remember how much that was? It was around $722,000. You see, after all that talk about people moving out from condos and downtown become a ghost town, the average price is sitting at around $750,000, already higher than the pre-pandemic high. And most people haven't even started moving back to the office yet. We have talked about the affordability issue. Yes, people desire more space, but that comes with a price. Entry-level products would always have demand. We have talked about the danger of inflation due to substantial money printing. We have talked about global supply chain issues that are causing construction costs to go way up. We have talked about the unusual big price gap between low-rise and high-rise, and that the gap would naturally shrink. It is much more likely for high-rise prices to go up to shrink that gap instead of low-rise prices coming down because construction costs are not coming down. And of course, the supply and demand issue has recently become such a heated discussion. But if you really think about it, things haven't changed that much from June to now. But once again, there's a surge in demand to buy properties. Here is why. Whenever a drastic thing happens in the market, could be a policy change, could be a disaster like the pandemic, it typically takes people 1.5 years or so to accept the reality, digest, and react. You see, we have talked about all those money printing, inflation issues numerous times since the early days of the pandemic. Maybe 20% of people took action immediately and saw the crisis as an opportunity to grow their wealth. 80% of people probably decided to wait and see. Now that things reopened and people are more active, they realized that things got a lot more expensive and there's a long wait for a lot of things even though you got the money. This is when they know inflation and supply chain issues are for real. This is when they know they need to do something to protect their wealth. And the prediction that interest rates may go up sometime next year is adding gasoline to the fire. It is actually driving more people to go out and buy now so that they can lock in the low interest rate, especially the first-time buyers. In the long term, I don't think a high interest rate would have a big impact on the overall market dynamics because the other factors that we just talked about would overweight the significance of the interest rate. What about the rising COVID cases and the Omicron variant? Are they going to disrupt the market once again? Haven't seen COVID for almost 2 years now. Would you say that around 80% of the people have adapted and decided to live with the virus? I think it would be very unlikely for us to see the same kind of disruptions we saw when we first learned about COVID. So I would expect the market to continue going very strong in 2022. If you want to stay on top of the market, make sure you subscribe and hit the bell now.